Servus Männer, it's Red Pill Germany again. Today I want to talk about the economy again, in specific the Turkish economy. But I don't just want to single out Turkey. A lot of these issues are plaguing other countries too, and I will discuss them in general with the example of Turkey now, because it is really current there and I read a lot about it recently. In my previous video, I was talking a lot about current issues there, some short-term effects, like the lack of tourism and lockdowns, but these are issues that many countries are struggling with at the moment. Today's video is more about the long-term, more structural and deeper lying reasons for the economic problems of Turkey. Now, what are these problems? I would say that it is a rather toxic or dangerous mix of several issues, and among them are definitely the high inflation rate, the dwindling exchange rate versus the euro and the dollar, for example, decreasing foreign currency and gold reserves when at the same time they have a lot of foreign debt, and generally that many investors and other actors on the market are losing faith in Turkey's leadership, and they doubt that Turkey will do what is necessary to solve the problem, or that they misdiagnose the problem or are using measures that don't help and make the situation worse, in fact. Also, the way that Turkey is investing in infrastructure projects turned out to be a huge problem, and I will explain why towards the end of the video. Erdogan says that the interest rate is the mother of all problems here, but I'm not so convinced that I can single out one of these problems so much. It seems like it is a vicious circle and one problem begets the other and vice versa. So I should therefore probably start with the currency crisis, because I talked about that in my last video already. So in brief, the country has accumulated a lot of foreign debt and they have to repay that in that foreign currency, of course, and they're running out of foreign currency reserves, which is bad when at the same time the Turkish lira becomes progressively less valuable compared to the euro or the dollar. This is what makes foreign debt so dangerous, especially in developing countries, because exchange rate effects can actually increase this burden of debt and then cause the country to borrow even more money or raise the taxes, which is another burden on an already weakened economy. And this is why now Turkey has been negotiating with some foreign countries, the UK, China, Japan and Qatar, about currency swap lines. That is an interesting measure. The European Central Bank has one of these swap lines, for example, with the Fed in the United States, and that means it's an agreement between central banks that they will provide each other with their respective currencies if the other central bank, if the other country is in need here. The way I understood it, at least, is that that doesn't ultimately solve the problem, but it allows you to gain some precious time here at least. So I should say that I'm obviously not an economist, but I researched the topic in recent weeks and months, and I think we are all affected by the economy. We are all operating in this economy as a consumer, as an investor. We probably earn wages somehow. So I think it is important that people exchange their ideas and their attitudes and their viewpoints about the world economy or the local economy. So I'm also very much interested in your opinions, and maybe you have more information or deeper insights. I would actually be very pleased to read about that in the comments down below. So what I was describing earlier, this vicious circle from debt, inflation and taxes, that is something that is plaguing many countries, as I said before, and in many cases it is extremely hard to get out of this. Here you can, for example, see the exchange rate 1 Deutschmark to 1000 Italian lira. And here you can see the annual inflation rate for Germany and for Italy. You can see clearly that, of course, the inflation rate became rather similar when the euro was introduced. So, of course, we also have inflation in the West. Our central banks aim for an inflation target of between 1 and 2% annually. But what Turkey has at the moment is almost every year in the double digits. Here you can see the increase in prices with respect to the corresponding month in the previous year always. And here you can see the exchange rate between the Turkish lira and the US dollar for the last year. And of course, Mr. Erdogan and his AKP, they are blaming foreign investors and dark forces abroad for this. He says that they're setting a trap for the Turkish economy, for Turkey, and that they're out to get them. This is a rhetoric that is often used in Turkey. It was already used in the Ottoman Empire actually. So there is definitely a reluctance to deal upfront with your own issues, and it is more comfortable on the other hand to just blame foreigners. I would think that the founder of modern Turkey, Mr. Atatürk, he was actually an exception to that rule. So yeah, if you think about foreign intervention and forces, you could say, oh look, how our currency was devalued in February to April. That was foreign intervention. But you shouldn't just look at these short-term things, you should look at the long-term trend also. So here you can see the same exchange rate just in the time window of 2005 till the present. And what you see here is an overall linear trend in the entire period with a little bit of noise on top and a little bit of fluctuation as always with this kind of data. But you overall see a linear trend. I mean, we in the West, we also use quantitative easing and we have our problems, but it just means that the Turks are inflating their currency at a constant rate faster than we do. And this has been going on for a long time, since the Bush administration all the way through the Obama administration, and of course now under Trump it also doesn't change, because I don't think there is a lot that the West is doing here. To me it seems like that this is just the monetary policy of Turkey, and it has been like that for a very long time, as this graph clearly shows. This is not a recent event, this is not an isolated issue, this has been going on for over a decade. But how is it supposed to be? Well, for me personally, the old German system is of course the ideal. And that is that the government is in charge of fiscal policy and the central bank is responsible for monetary policy. And they are independent of each other, and the goal of the central bank must be low inflation, or a certain inflation target, as I already said, because you also don't want deflation. So in short, a stable currency. That is the responsibility of the central bank, and the government cannot interfere with this monetary policy. By the way, Donald Trump also doesn't like the fact that the Fed is independent of his federal government. And this is very natural, because politicians, they want to hand out presents to the voters. They want to boost the economy, they want to take a lot of debt so that they can pump it into the markets so that they get more popular in the short term. This is just vote buying. But it is the responsibility of the central bank, by setting the interest rate, the cost for borrowed money, to watch over the stability of the currency. And this independence of the central bank is exactly what Erdogan ended when he changed the system in Turkey to the presidential system. Now the Central Bank of Turkey is no longer for the most part independent, but he can tell them what to do. He can also fire people for not lowering the interest rate fast enough. I read that Erdogan even thinks that a low interest rate would actually cause lower inflation, when pretty much everybody else agrees that the opposite is true. A higher interest rate is the standard tool in monetary policy to limit inflation, because with higher interest, the cost for borrowed money goes up and less money will be borrowed therefore. Erdogan is also intimidating journalists and people in general who want to talk about this crisis or these problems of the country at the moment. And while he can do that in Turkey, or like Ali Babakan said, you can dictate onion prices, but you cannot dictate the foreign exchange price. That's not how the international markets work. And you can also at the same time not force international investors and actors to magically trust your leadership and trust your country again, when for all these reasons that I mentioned, they have lost some trust. And how does that look like now? Well, for example, the credit worthiness of some banks have been dropped by analysts recently. Also, and this is a huge deal, Turkey faces the threat or the real possibility that it might get ejected from the MSCI World Emerging Market Index. They might be demoted from an emerging market to a frontier market. So you might know that a lot of people invest in indices. So if you, for example, buy an ETF, MSCI World Emerging Markets, you have Turkish stocks, Turkish companies in there. But if they drop out of this index, then they will not be in there anymore, and that would pull out a lot of foreign investment from the country. So the next question I ask myself is, what did Turkey do with all that money that they borrowed? Why did they have to accumulate all this debt? And what I found was, for example, there might be other things, but very interesting, I found these public-private partnership or PPP infrastructure programs. And you might have heard about it in Turkey. Magnificent new buildings are being built, like one of the biggest airports in the world near Istanbul. Then these amazing bridges over the Bosporus, power plants, roads, etc. You name it. The thing is that they couldn't pay for all this stuff as fast as they wanted to build it. So as the name PPP suggests, the Turkish state is looking for private partners that invest in their infrastructure. And one example that I read about is, for example, a toll bridge in Istanbul, and that was built by a Turkish-Italian consortium. The way this works then is that the private investors are, of course, funding the project, and in exchange they demand a part of the profit that this building, in that case the toll bridge, would generate each year. And these contracts are made for several years, like 10 years. And what do these private investors gain then? Well, if they didn't see a huge risk, or if the gain that they suspect were great enough, they would have built that bridge all by themselves. They wouldn't have needed a partnership with the Turkish public sector. But what the public side is doing here, they are granting the private investors a guaranteed profit every year, no matter how bad this bridge actually does in terms of toll revenue. And that is of course great for the foreign private investors. They don't have any risk. The only risk is that Turkey would nationalize the bridge, wink wink. But if that doesn't happen, they are granted a minimum profit each year, and the Turkish state, or I should probably say the Turkish taxpayer, has to pay that money every year then to these foreign investors in case the bridge isn't doing so well. And as you can imagine, this minimum annual guaranteed return on investment was of course not set in Turkish lira. No, it was set in euro or in US dollar. And what happens now over the course of 10 years when your currency is devaluing? Yes, exactly. You need to get your hands on foreign currency and you have to fork it over to these international investors. And the cost for coming up with these dollars or euros is of course laid on the Turkish taxpayer, who have to pay ever higher taxes to come up with these payments. And this is not just done for this one bridge. This is a lot of infrastructure projects, and the burden must be immense now. Now, this gamble would have worked perfectly probably if the wages in Turkey and the overall economy would be doing great. Then a lot of people could afford to take the toll bridge and they wouldn't have to take another bridge or just not drive over the bridge so often. And I have found now that in recent years the toll has actually increased in cost for the people who want to cross the bridge several times. So if people as a result avoid this bridge, as an example now, this same logic is also valid for any airport or anything like that. then this project is less profitable and the Turkish taxpayer definitely has to foot the bill. So I couldn't find an estimation for how much that actually is each year, but in principle the problem looks very clear to me. I think the Turkish taxpayer has been sold out to foreign investors, as it seems to me. Alright, there are of course many other aspects to the current economic situation of Turkey. And the longer you search and the harder you look, the more problems you will find, of course. But I hope I could give you a little glimpse into the economic problems of Turkey for today. And I hope I could also get the point across that these problems are all interrelated and connected. They are not isolated from each other. And they are very reminiscent to me to the problems that I see in a lot of Mediterranean economies. A similar thing could be said about Italy or about Greece, for example. And maybe in the end it's just a mentality question of how you deal with money, of how your fiscal discipline is developed. And I also gave you some reasons why this is not the case so much in Northern Europe. I told you, for example, how traditionally in Germany the central banks are independent from the government for exactly these reasons, that you don't maneuver yourself into such a swamp out of which it is very hard to come out, and some countries can't make it on their own. And then they have to ask the World Bank or the International Monetary Fund or whatsoever for help. And that means restructuring, and that means a foreign power basically dictating you what you have to do in order to get better. It is basically a monetary and fiscal rehab. Some people might take offense to that, but many people agree that it can be seen as a person who takes certain substances and he has to go on rehab to become sober again. Alright, let me know what you think about that in the comments down below. And I know that I come across as an arrogant Central European who is trying to explain the problems of the Mediterranean world, but that's just how it is, I guess. Enjoy the rest of your day. Servus, Kameraden.